So you finally made some serious gains this cycle. Great. Maybe you bought during the last bear market. Even better. Maybe you've been laddering into some alts along the way. Either way, your portfolio's up and you're starting to think about taking some profits. I think that's a great idea. But here's the part most people overlook until it's too late. How do you actually cash out without getting crushed by fees, taxes, slippage, or platform limits? In this video, I'm going to walk you through the smartest ways to exit your crypto positions, from peer-to-peer tools to OTC services and tax-friendly withdrawal strategies, so you keep more of your profits and stay ahead of the curve. Let's start with the problem. Most retail investors rely on centralized exchanges to convert their crypto to fiat. And while platforms like Coinbase, Binance, or Kraken are convenient, they also come with some of the highest fees, especially when you're withdrawing to your bank account. Coinbase, for example, charges up to 1.5% in fees when selling crypto into fiat through their basic platform. Binance charges even more for certain methods of withdrawal, especially in regions with fewer payment options. But that's not the only cost. When you try to withdraw a large amount of crypto all at once, especially in the middle of a volatile market, you might experience slippage, that's price impact, or even delays in processing. And depending on your country, you might also trigger extra tax reporting or compliance red flags just by moving your own money. So let's talk about how to avoid all of that. One of the most underrated ways to cash out your crypto profits is through peer-to-peer or P2P platforms. Binance P2P is one of the biggest. And if you've never used it, it works like a marketplace. You find a buyer who wants to purchase your USDT, USDC, Bitcoin, or Ethereum. You agree on the exchange rate, and they send you fiat through your preferred payment method, whether it's a bank transfer, PayPal, Wise, Revolut, whatever works locally. The advantage here is that you avoid exchange withdrawal fees entirely. There's no middlemen taking a cut. You also often get better rates, especially if you're in a country where crypto demand is high, but fiat on-ramps are limited. Another good P2P platform is Local Bitcoins. It is still active in some regions. Or Paxful, which supports Bitcoin and stablecoins with a wide range of payout options. Just be sure to use the built-in escrow service on these platforms to avoid scams, and only trade with verified, high reputation users. Now, if you're moving large amounts, say 5 or 6 figures or more, a P2P trade might not cut it. This is where OTC desks come in. OTC stands for over the counter, and these are private, off-exchange trades facilitated by dedicated brokers. Most major exchanges now offer OTC services, including Coinbase Prime, Binance OTC, Kraken OTC, and Bitfinex OTC. What's the benefit? You get access to better rates, lower fees, and no slippage because the trade is negotiated privately, not routed through the open order books. OTC is especially useful if you're trying to sell a large position in a low liquidity altcoin, or you need to convert profits without affecting the market price. Many OTC desks will also work with your accountant or tax advisor to help structure the sale in the most efficient way for your jurisdiction. And if you're a US resident, some of them offer 1099 reporting integration to simplify tax filing. Speaking of taxes, let's not forget about that. Every time you convert crypto to fiat, you're likely triggering a taxable event, but you can structure your withdrawals to be more tax efficient. For example, if you've held your crypto for more than a year, you might qualify for long-term capital gains rates, which are significantly lower than short-term rates in most countries. If you live in a country with a high capital gains tax, like the US, Canada, or Australia, you might consider cashing out in lower income years, spacing withdrawals over multiple tax years, or even relocating to a crypto-friendly jurisdiction before realizing those gains. Countries like Portugal, El Salvador, and Germany offer favorable crypto tax laws, with Portugal offering 0 capital gains on crypto held by individuals for over a year, and Germany exempting long-term holdings held for, again, over 12 months. You don't have to move to a new country permanently to benefit from this, If you're planning a major cash out, even spending a year in a tax-friendly country before you realize those gains could result in major savings. Keep in mind, if you're a US citizen, you are taxed based on your citizenship, not on your residency. Always speak with a tax professional first, especially if your jurisdiction has exit taxes, residency tests, or complex rules around crypto holdings. And let's not forget the most seamless path of all, stablecoin payouts. Some platforms like Kraken or Coinbase now let you cash out into USDC, which is a stablecoin backed one-to-one by USD, and then use Visa compatible cards or ACH transfers to spend or withdraw your funds gradually. You can also use crypto debit cards like Crypto.com, Visa BitPay card, or Wirex, which let you convert USDC, Bitcoin, or Ethereum into fiat at the point of sale. This is useful for day-to-day spending or travel, but keep in mind, these are still taxable disposals, so keep good records. To sum it up, taking profits is only half the battle. If you want to actually keep those gains and use them without getting wrecked by fees, you have to be strategic. Use P2P platforms when possible. Use OTC desks when size matters. Use stablecoins when you want flexibility. And always plan with taxes in mind. If you want more help with this, we go even deeper into these strategies at learningcrypto.com. Let me know in the comments how you're planning your exits this cycle, and if you found a low-fee solution that works for your region, share it with the community. Thanks for watching. I'll see you in the next video.